In the aftermath, you asked, are we safe? I think you asked me, are we safer now? So we have been very focused on making sure that the core of our financial system has enough capital that we can provide assurance that our major banks would be able to go on lending and providing credit to the economy, even after a very severe shock. We do what are called stress tests, and the Fed just completed the first half of these stress tests last week, and we hit the major banks that we subjected to these stress tests with enormous shocks. Unemployment increasing to 10%, huge declines in house prices, commercial real estate prices, enormous shocks, and publicized exactly how each of these firms would fare and what losses they would take in every portfolio and what their capital position would be at the end of that. And I think the public can see that the capital positions of the major banks are very much stronger at this point. This year, all of the firms passed the quantitative part of the stress test. And so we've built capital, we have strong capital requirements, also liquidity. So suppose there were a scare and depositors decided we want our money, we're worried that there's something wrong in your bank. Well, having enough liquidity that you would be able to meet deposit outflows that could occur, let's say, over a 30-day period, even if they were severe, we've put in place for systemic banks, internationally active banks, liquidity requirements that hold in order of magnitude more liquid assets. And we've also changed the system in terms of how derivatives work. Now, most standardized derivatives are centrally cleared rather than being involved in complex webs that are very difficult to untangle when a major institution gets in trouble. So the architecture of the system has changed in important ways that's made it safer. We've put in place reforms for money market funds. There were runs on money market funds that had fixed net asset values. In other words, $1 of deposit, you would always get $1 back. We're forced major institutional funds that hold other than government paper essentially to have variable values, which tends to inhibit a run. So I think the system is much safer and much sounder. And as I mentioned, we're doing a lot more to try to look for financial stability risks that may not be immediately apparent, but to look in corners of the financial system that are not subject to regulation outside those areas in order to try to detect threats to financial stability that may be emerging. So would I say there will never, ever be another financial crisis? Probably that would be going too far, but I do think we're much safer, and I hope that it will not be in our lifetimes, and I don't believe it will be.